The main priority for shoppers in this market in Hamburg is getting the lowest prices for their fruit and vegetables. But for more than 2 years, persistently low growth in consumer prices has been a worry for central bankers and governments across Europe. Their concern has been that weak economic activity and inflation after the 2008 financial crisis could create the kind of stagnation that Japan has suffered for nearly 2 decades. But the latest data shows that aggressive stimulus measures taken by the European Central Bank and rising oil prices are starting to make things more expensive in the shops. Consumer prices grew by 1.1% in December compared to the same month in 2015. That's the fastest growth rate in more than 3 years. And it's much faster than the 0.6% expansion in November. But excluding food and energy, which can vary widely, the core inflation rate only rose by 0.9%, and that's still short of the ECB's target of 2%.
We really have to differentiate, oddly enough, between inflation and rising prices. What we have in the Eurozone isn't really inflation, it's just rising prices, particularly the rising price of oil.
And the ECB's job of trying to manage inflation and stimulating growth is further complicated by wide variations in economic performance across the region. Consumer prices in Europe's biggest economy, Germany, grew by a robust 1.7% last month year-on-year. That was more than double the rate in November. But prices rose by just 0.5% in Italy in December. And when looked at over the whole of 2016 compared to the year before, they fell by 0.1%. That made 2016 the first year of deflation in Italy since 1959.
Some people would argue that this is exactly why the euro itself is a misguided project, because it's very difficult, if not impossible, to have one monetary policy for such a diverse group of countries.
So while investors have found something to cheer about in the new year following these figures, a closer inspection shows that the Eurozone may not be entirely out of the woods yet. Azhar Sukri, TRT World.